that cost me my job, and later that cost me my marriage.
Forget about pension. We are not going to have pension anymore.
You don't need a job to have an income.
Oh my God. Laurent Scherer is a business leader who, more than anyone else, has endured the highs and lows of making money, both in business and in private life. Now a savvy investor, he shares the hard-earned knowledge he has gained with others.
Everyone would love to have a time machine.
I can tell you stories about wealth advisors that have no wealth.
Can you imagine the compounding interest?
It's kind of a big elephant now in the room.
That's a very good question. It's
Okay, Laurent, nice to see you. And you started to invest early on, so you saw the sunny side, but also the downside of it. If you could just go back and give an advice to your younger self at that time, what it would be?
Yeah, well, first of all, thank you so much for the invitation. It's a pleasure to be here. And, everyone would love to have a time machine. I'd certainly do other things with a time machine. I'm going back to see myself. But I find the question very interesting because I get it all of the time. People know that I'm investing since I was 18, earning my first money. I started investing very early. So people ask for my advice, and I get this question all the time. What are the tips? What are the pitfalls? What did you learn? How can you help me? And it's a funny thing with learning because sometimes you just have to experience it. It's not sufficient to learn about it. Like I can guarantee you, if I take my strategies that I know work, that I've been using for decades, and I'll teach it 10 people, 9 out of those 10 people will not follow the strategy because they think they can improve it, they can make it better, low risk, more return. Right. So when it comes to investing, it's very personal. You need to learn according to your risk appetite, your goal, whatever product or sector you're familiar with and you're comfortable with. And if I would give a tip, however, it's try to master a few things rather than trying to learn 1,000 different things.
A jack of all trades. Yeah.
Exactly. So focus on certain key aspects. And to myself personally, an advice that I would give is start investing long-term more early. Because I was all about trading. For me was a means of making money on demand. Right? Mm. Trading is not investing. I was a short-term swing trader. So you enter the money at an opportune time, and then you try to exit it, right? Buy low, sell high, basically. And that was a means for me to make money on demand. And I only started investing much later. But as you and your audience know about compounding interest, the earlier you start, the much greater the impact. So if you invest for 30 years, the same amount versus 40 years, it's not just 30% more, but depending on your annual return, it can be double the outcome. So starting as early as possible to also invest while you're figuring out, that's something that I was lacking.
It's amazing in the sense that many teenagers or in early 20s, gentlemen and ladies, don't have the same objectives you have had. And in retrospect, you can look back on decades in the industry and have also learned to overcome cycles of investing. So from that perspective, of course, you talk 100% from own, also, I think, hard-earned experience.
It was hard-earned, yeah. It was very, very rewarding at times where you feel like you can predict the future and you're going to be a gazillionaire right next year. And then you get humbled by the market and you punish the market to make your money back. And of course that doesn't end well.
Sounds familiar to me. So I've seen everything since the mid-90s. So
right, okay. So I missed that bubble, but I got burned in the 2007 crisis.
Yeah.
Before that, I made a lot of money and then I gave it all back and plus some. So yeah.
Good.
But what influence did it have on you personally? I mean, from the feeling that you can have it all, you can do it all, and suddenly being somewhere at a different place.
That's a very good question. It's humbling, right? Because I mean, especially if you're young, you're very motivated and you don't get demotivated so much. But I was also very arrogant. So I continuously went back to the market because I said, there is no way that I'm dumber than so many other investors who are able to make money, right? So there's just that secret sauce that I need to learn. I didn't understand that it was about discipline and being humble and having a vision, right? And learning and applying the same things over and over again until you're successful, like incremental improvements until you figure it out. I thought, I just need that next step or, follow the next guru or buy the next book.
Yes.
So the market has a way of humbling yourself and,
but the beauty is when you're young, of course, and you're more under testosterone, so to say, that you don't play with as much money as you have when you're in your 30s, 40s, or in my case, a bit beyond. So it's good to make those hard lessons with less money at risk, of course.
It was still a lot of money for me.
Well, as long as it's painful or at least itches to some extent, it's a helpful lesson.
True. But it was that's probably a good tip too. But you can hear that all the time, right? Knowledge is democratized today with social media, and if you apply a little bit of common sense, then you can isolate those people who truly understand and follow them versus just general advice that doesn't really work. But one piece, but that's a good piece of advice. Don't use money that you actually need for your living, right? You need to be comfortable in losing whatever you're investing, because chances are at the start you will lose it all.
You mentioned this buzzword, democratization, the verb of it.
By the way, what does it mean?
So that financial inclusion, so that everyone can benefit from knowledge, or in terms of financial markets, where we learned our share, that you have access to all kind of investments where also the larger investors have access to. That's the democratization of private markets or alternative investments where we get to know each other.
True. Very interesting. I never thought about the two things as the same principle in two different markets, because you're right, Thorsten, the professional word that we come from, democratization, means the ability to distribute a certain product that was only available to high net worth and professional investors like companies, bring them into the retail market so that your average retail investor, we call them, so private individuals, are able to also invest in those. And that's a sort of a democratization of those type of products. What I meant democratization of knowledge is that when I look at the generation of my parents had no financial education. They're blue-collar workers, and they were not in a circle of people investing or holding properties. They didn't even know these things exist.
And it was all offline back then.
It was all offline, right? You could buy books, but then it's much harder to learn all of this from a book. So they didn't have the knowledge. But today, if you have the interest, either you have the money, and then you think, how do I preserve my money and how do I multiply my money? So you go online. What do? You ask ChatGPT, you Google it, you go on YouTube. And if you don't have money, well, how can I generate money, right? And same thing again, you go on YouTube. What are side hustles that I can do? How can I invest? How can I trade? How can I build a portfolio? How do I invest in real estate? So today, the knowledge, so how to do things, is democratized, meaning everyone with an access to internet can learn.
Yeah. But coming back to your experience, was it more like learning from books and from videos, or trying yourself? I mean, the knowledge that you can get from the books is nothing compared to what you trial and error, right? So.
True. So to me, social media, books, talking to people, it's all the same. It's all different formats of people that either know or pretend to know to transfer their knowledge to you. I like books least because it's just slow. And my wife says I have ADHD. I can't read for a long time. I get itchy if I read for an hour. But social media is easier to consume. It's more natural listening to a person. At the time, I had the chance of, my very first job was for broadcasting company RTL when I was still in high school. I had a summer job at RTL working in the archives, copying copying TV series and movies and sending it to 𝗟𝘂𝗿, for example. So that was one of my summer jobs. And there was someone there who was looking at the charts, the market, and then I remember there was a bombing in London Underground, I believe it was. And insurance companies lost value that day. So he was all over the place in the charts, and he was explaining to me what he's doing, like buying the dip, those companies, they still make money, but it's just short-term depreciation because people are scared, and anxious, and they want to get out their returns or their profit out of the market. So he used these opportunities to buy good companies and then sell a couple of later when the companies went back up. That was so fascinating to me. That was making money on demand. You just have to wait for a certain opportunity to present itself and then be ready. Right? So that was one of the first strategies that I used, and it worked very well. Of course, this works well when you're in an uptrending market, which we had between, after the bubble of 2000, before the bubble of 2007, where markets are just going up. So if you buy every dip, at some point you're going to make money, right? That doesn't work in a consolidating market or in a crisis, for example. So that's why I started losing money again. So that was my first source of inspiration and knowledge. And then I bought, at the time it was more magazines than books. So there was certain financial newspapers that had a dummy portfolio where they told you what companies they bought into the portfolio, at what price, why they did it, etc. And you can just replicate it, copy it. Right? So I did that for a while, and then in forums are no longer a big thing today, but at the time it was all about forums. And then I started buying books, but more specific to, I believe the first book that I bought was The Turtle Trader, a very famous story of I believe it was a hedge fund manager who said, I can teach trading to anyone. And he recruited a bunch of non-financial people and taught a certain investment strategy. And all of them made money, and I think he bundled it into some sort of a hedge fund. I don't get the story straight 100% anymore, but I remember it was called Turtle Trader. So that was one of the first books that I bought, and then I did online courses, especially after I lost a lot of money. I said, well, now I need to take this more seriously and identify people like Warren Buffett that are really known in the industry. And so I listened to him, I bought books. And I also purchased a couple of online trading courses about options trading. That's what I'm doing ever since. So I'm trading ETFs and then lowering my entry price through options. That's very technical now.
It is.
Yeah. So it's a combination of all of these things, and I think at the root, it's all the same. It's people teaching other people, right, through different kind of media.
But the beauty is what you just mentioned, this turtle strategy.
Yeah.
So everyone can make things complicated. So those that have really full comprehension of what they're talking about can explain it in a simple and digestible way. So I think it's maybe also something as an advice for the younger generation to go to those people that can express themselves in a more simplistic way.
Absolutely. And that's what I'm trying to teach my kids. They're only 10 and 11. So
very good.
I will not explain them how options are working and what the roots of engagements are and, risk appetite and whatever. But we start at why do you even invest? So when they get money, instead of it all being spending money, we say, well, parts of it is spending money for your ice cream and your books and whatever you want to buy with it. But another part is to invest. And why do we invest and what is investing? So I explain it on the two models. One is real estate. So you take your money, you buy a house, and then you hold a house that is worth the money that you had, and you put a tenant in who's paying you to live in your house. So you get an income. You don't need a job to have an income, right? But you need money to have that. So to build a portfolio for them to be able to someday invest into real estate, we applied that same method into the stock market, where we said, well, there's companies out there, like we took Coca-Cola as the first stock, and I said, Coca-Cola is a company. It's not owned by one individual. It's owned by many individuals who each have one little piece of the company. And when Coca-Cola sends soft drinks, they get paid for it. So if you hold part of the company, you get paid part of, whatever they're getting paid to sell Coca-Cola.
I have to smile because our slightly older kids, so they got more or less the same input. So to keep it very simple and for kids.
Keep it simple, exactly, yeah. They need to understand what the purpose is of investing, right? Not get lost in technical details.
Yeah, super smart.
Yes, the kids are so much smarter than you would expect. Yeah.
Laurent, so the level of financial literacy in the society is quite low. And what do you think should be done to improve that?
Very important question. And where did you get your financial education from?
Well, I'm a banker.
So just in your professional life.
So yeah,
but by the way, I heard that even the people who work in finances, so I don't, even they have very low, well, I don't mean you, Thorsten, but I heard that a lot of people really have low level of financial literacy, even then.
It's true. I can tell you stories about wealth advisors that have no wealth and advise wealthy people. It's always fun.
God.
It's always fun, very authentic. Yeah. Not.
Oh my God.
Yeah, like we said earlier, you kind of have to go through the process of pain and success and failures. You have to experience it to gain the knowledge sometimes. But still, you can still learn from others and then just teach what they are praying without really knowing and having experienced. Probably school is a good place to start. But you know how children are. I know you have children. I have children. Everyone who has children or who was at high school know that you're not the most open-minded when it comes to absorbing new knowledge. You're very selective, right? You tend to forget a lot that people, important lessons that people were teaching you. But it can also do no harm to teach people about how do you build wealth, right? How do financial products work? What are insurances? What are insurances that make sense to have? What are some methods that financial companies might even use to harm you, right? Or that make less sense to. So financial education could start at school. At least you're not doing any harm, right? By providing the information. Depending on the grade and where you're going with your education, of course, you become a lot more sophisticated, right? If you learn about finances and economics. But that's definitely not available to everyone. So you have a certain part of the population who just doesn't know about this.
At least for Luxembourg, I can make the pledge that there were initiatives over the last years, and maybe you guys have heard about that there were on purpose initiatives where people from the financial sector go into school classes to give their insights into markets or in business, etc. So because you won't get taught how to start up a business, how to invest necessarily, as we just agreed. And that was something that can be way more widespread.
Absolutely. I have a friend, Deepak, who actually did that for a while, went into schools and tried to plant a seed, because that's all you want to do. Because as we said today, knowledge is democratized. So all you need to do is plant the seed. Hey, there is something out there. If you learn about it, you will be financially independent, right? You will secure your pension at some point. You can have nicer things. You can learn about how to protect yourself against different market environments. But you just have to plant the seed so that they are interested in going onto YouTube and ChatGPT and ask the right questions.
Yes.
But speaking about pensions, so it's kind of a big elephant now in the room. And I can remember 15 years ago when I did my second master, professor told me, like, forget about pension. We are not going to have pension anymore. What do you think about that?
I think in Luxembourg, that's probably true for many parts in the world. In Luxembourg, we're kind of blessed. There's probably no better place.
We will still have pension. That's what you want to say?
Yeah, we first of all, we get a high level of pensions, and we have good reserves. It looks like as though we will need to tap into those reserves within the next couple of years. And if nothing changes, the demographics or the system, we need to change the system, then those reserves could become depleted. So our government is very smart in addressing the problem now. Like, as we said, compounding interest.
Isn't it too late already?
No, I don't think it's too late. It's still early to make adjustments, and that's what they're discussing. What I would humbly advise whoever is a decision maker in looking at making the pension scheme more resilient is to think a little bit more out of the box, and instead of just forcing people to retire later or forcing people to contribute more, those are little adjustments that you can do to prolong a problem that has been existing for 20 years. There might be an interest in looking at different models that other countries have already successfully implemented. Like, just for the benefit of our audience, in Luxembourg, we have the so-called pay-as-you-go system, where if you're a contributor, so you get an income, part of that income is paid out to whoever gets a pension, right? So it's those who contribute, those who work, they pay for pensions of those who no longer work. That only works if there is a balance that we can keep of people contributing and people taking out. But with the current demographics, actually the demographics that we had at least for 20 years, the balance is more and more off balance. So I don't know the exact figures, but what I read recently is that we would need 3 to 4% growth in population, in the working population, those that are contributing, to pay for more and more pensioners, because people get older. There's more pensioners coming with the boomers, etc. So we would need 3 to 4% growth in paying contributing workers in Luxembourg, but over the past 20 years, if not more, we had less than 2% per year. So that system will not be sustainable going forward. And one thing that other countries were doing, like some Scandinavian countries, for example, but also in Canada, for example, they have a second layer. So I'm not talking about private pensions, products that you can buy from private companies.
Equities?
I'm talking about like a state fund, basically, where everyone that starts working invests part of his contribution, instead of all of his contribution going towards the pensioners. Part of it goes into his own account.
Is it done automatically, or everyone should have this awareness? Okay, now I invest that.
So we already have that in the second pillar and the third pillar, where you can buy pension products and say, well, I contribute 500, 1,000 per month, and I can deduct it from the taxes to make initiatives. But people need financial education.
Exactly, that's what I wanted to say.
So if you look at the figures, it's not widely accepted by the population. Many don't have any private pensions, especially in France and Germany. It's as bad as in Luxembourg, and the state pension in those countries are not as good as in Luxembourg. So we're still fortunate. But what I'm talking about is an automatic system where you say, when you start working, instead of just paying a bonus to the parents, for example, you could start at the birth of a new child. Instead of just giving a bonus to the parents, you can give that bonus and also start investing for that child, so that when that child is 50, 60 years old and go to pension, can you imagine the compounding interest on just that bonus alone? And if you give the parents the ability to, or if you give that person, once it enters the workforce, the ability to put part of the contribution that it's paying automatically from the salary, that goes into that same account with, let's say, 5, 6, 7% interest every year. When you retire, you will have built wealth. Now, when you retire, you get a comfortable salary, right, a pension, but you don't have accumulated wealth. But if you would put part of that aside into a state-run fund, for example, that is low risk and that earns 5, 6% per year, and you hold those shares, similar to what the Americans have as the Roth IRA or 401k,
yes,
where part of your salary and then your employer can match it, and you put it on an account that's either tax-free when you put it there, or that's tax-free when you take it out, and you cannot access that amount, you cannot access that money until you are retired. But you're also not taxed on the interest that this account is accumulating, and you're allowed to invest that money into certain securities, like funds, like stocks, like obligations. instead of just having it on a savings account, for example. So what I would, to make a long story short, what I would humbly advise whoever is a decision makers in the policy, look at an alternative model to the pay-as-you-go. If we cannot implement a second model that is more robust than this one, in addition.
It reminds me of a Chinese proverb which says the best time to plant a tree was 20 years ago. The second best time is now.
Exactly.
It applies for your very own pension.
Exactly. Yeah.
Or to diversify the economy.
There is a way to implement this model, and it's not at the cost of anyone. So it wouldn't even cost anyone. The state doesn't have to supplement. Contributors don't have to pay more. Pensionees will still, the current pensionees will still get what they get now. But at some point in the future, pensionees will start to get more and more and more, because some will have started to invest in their own retirement instead of just giving everything away to the people that are in retirement now.
So for all Luxembourg officials, pick up the phone.
Come see me.
But if speaking about the future, there is also this thing that we really cannot imagine our future without is now AI, artificial intelligence, right? How do you think it will change the way you work?
Yeah, if only I knew. So the changes that we see already is that it makes our workforce a lot more efficient. And Thorsten and I, by way of chance, we attended the same event this morning on the very topic.
Exactly. Yeah.
Kindly hosted by 𝗟𝘂𝗿𝗄𝗏. That was very interesting, and it's the same message. AI makes labor easier, but it comes at a great risk.
It reminds me just of an article that was published 1 year ago from the co-founder of LinkedIn, Reid Hoffman, that because it was last year, over the next 10 years, more or less, he said, all 9-to-5 jobs get extinct. So if it were a random person, I would say, who cares? But he was quite accurate in his predictions on social media and other channels. So how about that?
I don't know that specific article.
It was just republished, so it's again in the Gazettas. Yeah.
I'll look for it, because you're right. He's not some random guy. You know, he must have thought about this a lot and reasoned why he comes to this conclusion. I don't see it as 𝗟𝘂𝗏, as you're describing this. So one thing that we realized at Juniper Square, you know, the fintech that became a fund admin, that I'm working here for Luxembourg, we discovered that AI works very well, but it works best in combination with a human, because it hallucinates, it gives you different outcomes.
Yes.
You need to know how to prompt, what to look for. It's biased sometimes. Plus, when it comes to certain sections, like the sector that we're working in, private markets, you don't have a lot of publicly available information. So the ChatGPTs of this world have a hard time answering something if it has no data, right? So when we
just fantasize on something.
Exactly, just fantasize or give you high level.
It's getting better and better. We are just 2.5 years or 3 years into AI for the broader public. Yeah.
It is getting better. Though when we work with clients, it has to be accurate 99.9%.
Yeah, of course.
They cannot
Exactly.
just imagine things. So what we do, and our clients tell us that we have several years ahead of our competition. So you could look at our model to lead the way into the near future, and that is using different features from AI, different AI agents, but combine it with access to a specific section of data set, so that it can only use that data to answer the question and not hallucinate anything, and combine it with human interaction where needed. If you have a simple question and it gives you a simple fact, you may trust it. But if you have a more complex task, like can you build me this or that, or can you explain how IFRS works, or translate my accounts from, that this is very technical, I apologize, but, translate my accounts from LuxGap into IFRS, would you trust LuxGPT if you do it, or would you love to have an answer, but then have a human behind it who validates it and works with you?
Sure.
I just stare at our table, and underneath there's an old photo, and this reminds me of an article you have published a few weeks ago, the Kodak moment. Wasn't that good? The Kodak moment.
That was smart.
Of our fund industry. So I would love to hear what you have to say about that one.
Yeah, probably everyone knows the story of Kodak. They were a leading camera company at the time, and they were the first they designed digital cameras, but they didn't believe in it, so they didn't brought it to market. Then later someone else did, and they lost a lot of market share because everyone was going digital and they were still using the traditional. So that's what we refer to as the Kodak moment. And there's different stories like that, like with the flip phones, like Nokia, who didn't believe in touch screens when Apple came out. So there's a few stories like that. And you're right. I published an article a couple of weeks ago where I talk about the Kodak moment of fund administrators. And the basic idea is that we have a lot of service companies out there who know that they cannot be late to the train because, as your friend from the one you mentioned earlier described this morning at this event as well, the train does not leave linearly but exponentially. So if you miss it, it's trying to catch a ladder that's going upwards, right? It's you cannot just hop on the train at some point. So many companies understand that, and they want to use AI to make themselves more efficient. But what some companies might not understand is that, let me phrase it differently. What some companies end up to is a salad of different narrow functions that they buy. So they buy a specific tool that can do this very well, and then a tool that can do it, and then they try to integrate it. They don't train their people. It's not their own technology. They don't know how to use it fully. They buy the cheapest version, and they end up with a salad of different applications that is costing them more and is making them more inefficient. And the next generation of companies, and that's where the future is, I think, is heading, is hiring more IT engineers that can build AI in-house, that can build tools that do the function that they need to do internally, not only for the client's benefit, but also for the employees' benefit. Make the labor more interesting. Take all those boring labor tasks like coding. No one in our company is coding anymore. We have AI that codes. You tell AI, I want this feature, boom, here's the code.
English is the coding.
Yeah, exactly. It's the natural language models. So that will be the future within the next couple of years. It's really hard to look, further than 2, 3, 4 years.
That applies across industry, not only for Juniper Square in funds.
Yeah, absolutely.
I have a very hard question for you now.
Okay.
Yeah. So could you tell us about the biggest flop before?
Well, there were many flops. I mean, we talked about investing. There were certainly times where I lost all my savings. At some point, I tried to become an independent, to be a business owner through trading, because I was making money. At some point, I learned how to do it, so I was making money consistently. Then I got money from friends and family that I also managed, not big sums, but still. And I thought, well, I can see myself transitioning from being an employee into being some sort of a wealth manager. But I set it up in a way that it was not interfering with my job at the time, because I was trading the US market, which only opens in the afternoon. I was taking one day off from work. I had parental leave to set all of this up within the first couple of months. Right? So I tried to be smart about it, and I knew I would need to do this in parallel with my job until I can earn enough, because my wife at the time was not working. We had two kids. So I wasn't stupid. I wasn't rushing into it without consideration. And still, I didn't see a certain conflict of interest that particular company had at the time. So they fired me on the spot. And, that cost me my job. And later that cost me my marriage. And, that was a true
wow, that's quite a hammer blow.
Yeah, that was a true low point.
Oh.
What helped you to get out of the situation? Just what helped you to look differently at the world in these hard times?
Your comeback, so to say.
Yeah.
I wish I knew. It's probably a lot of different factors. I mean, being in Luxembourg helped because at the time I disagreed with the company who fired me, and I was talking to a lawyer. But then in the meantime, I found another job, an even better job. And I thought, well, that's not the signal that I want to send to the market. Like, just accept that you screwed up and, move on. So, and I was very transparent with that new employer upfront.
Good.
I think that's something.
A good trait.
Yeah, I think that's something that's very important, to just be honest with, not just with people that you need in your life, because you always need people, right? But also to yourself, like take an honest look in the mirror. And as I said, I mean, that was pretty devastating, right? And they were, it was scary, but what do? Right? I was still young. I was healthy. I mean, I was still married with 2 kids. You have the responsibility. So instead of lying down and crying, you just think about, well, where to go to from here. And I was I was always good, I guess, at accepting the lessons that I was taught. Mm-hmm. Not just learning a skill, but also like falling off the ladder and say, well, okay, so that didn't work. Now I know. Move on. Yeah.
And being a parent is always a very strong incentive.
Oh, it makes you resilient. Though my wife or my ex-wife, does absolutely overwhelmingly most of the work of that, but still having the financial burden, and thinking about how do I need to change to be the parent that I want them to have, especially in those kind of situations, really form the character.
Yeah.
True.
Could you share with us 3 major lessons you learned in your life?
It's better to have friends than enemies.
They're always nice with people, whatever comes.
But you see that a lot. I mean, I'm always fascinated by how easily people get offended and choose to confront, or not confront you, but choose to how can I say that? Not become your enemy, but be negative, talk down on people, right? Be more on the confrontational side than trying to find mutuality and how can we help each other? How can we have fun together? Right. So that was always more my trait. Like, how can I help you? How can you help me? Not to exploit you, but to grow together and build a happier life. So it's better to have friends than enemies, in my opinion. Though sometimes you need to be disagreeable, and I think men tend more to be disagreeable than women, and that's a topic for another day. But we always say, or many people say, that women are not yet paid what men are paid. Certainly not in Luxembourg. That's not the case if you look at the facts, but in other countries maybe. And that men are less agreeable than women might be one of the contributor, because they're just asking for more and go more into confrontation when it comes to their salaries and their careers. That's the whole nother suite of topics. I don't know, be humble and learn. Just, look at the world with childlike curiosity.
Beautiful.
That's great.
I had curiosity in my mind, and you just performed so nicely. Very good.
Well, thank you so much for this interview.
Thank you. That was a lot of fun.
Thank you for watching. If you liked our conversation, please press like and subscribe. And this way, the algorithm will know that you liked our conversation and will show it to more and more people.